Hi everyone, I'm Michael Cole, and now that we've covered China, Japan, and Korea, we're glad to welcome you back to Ming Tinti's Asia Logistics Forum for our panel discussion on the warehouse industry in Asia's emerging markets. With more manufacturers pursuing a China Plus One strategy, and as we witness yields in core markets dipping below the level of office investments in some cases, more investors are looking for opportunities in high-growth markets around the region, particularly in India and Southeast Asia. To help us survey the state of the market in these dynamic economies, we're glad to have with us today guests from Logos, CPP Investments, Cushman & Wakefield, and Vietnam's BW Industrial, as we look at the latest deals and strategies from around the region in our show, which is sponsored by Yardi. Before we meet our guests, however, let's review some of the forces driving demand for logistics space in these emerging markets and the growth in transactions that we have seen in recent years. Like in many markets, e-commerce is a key demand driver for warehouse space in Southeast Asia and India, with the online shopping industry in India having surpassed $58 billion in value last year. Vietnam has also seen its e-commerce market nearly triple since 2017 to reach $16.3 billion in value in 2021, while Indonesia's online shopping industry reached $24.6 billion in value last year. These economies are also playing a larger role as exporters, with container freight volumes at ports in India and Southeast Asia having risen steadily before the pandemic. This rise in online shopping and the shipping increase it has helped to spawn have driven new levels of investor interest in warehouse assets, with transactions of income-earning logistics assets having risen nearly 10 times in Indonesia last year compared to the pre-pandemic average. Warehouse deals in India reached $318 billion in value last year, and 2021 saw trades of stabilized logistics facilities in Vietnam reach more than double the 2015 to 2019 average, according to MSCI. In India, the rise of the warehouse industry has seen major investors enter the market recently, including Mapletree buying a logistics portfolio last year for $62 million. Also during last year, Blackstone bought out Embassy Industrial Parks for $700 million. In Vietnam, Logos and Manulife earlier this year set up an $80 million development venture, and BW Industrial announced new deals in the Vinh Loc 2 Industrial Park as well as in the Xuyen A Industrial Park. Also this year in Vietnam, Capital Land signed an MOU with the government of Bắc Giang province for a $1 billion industrial park. The Indonesia market has also been active, with CPPIB and Logos announcing a $200 billion industrial venture there last year, and Hong Kong Land also backing a Logos venture there earlier this year. To learn more about what's happening in India and Southeast Asia's logistics markets and how e-commerce is reshaping the industrial real estate sector there, we're glad to introduce you to our panelists. From Logos, we have Kieran O'Flynn, Head of Leasing for Southeast Asia for the developer and fund manager. From CPP Investments, we have Hari Krishna, the pension fund manager's head of India real estate and a member of the firm's global leadership team. From BW Industrial, Paul Wee, the startup's CFO, is joining us. And finally, we have Dennis Yeo, who looks over all of Asia Pacific for Cushman & Wakefield in his role as head of investor services and as head of logistics and industrial for the region. Following our discussion, as usual, we will have a Q&A session, which will give all of you in our audience a chance to ask questions of our guests. To join the Q&A, just type your question into our online interface. If you are viewing this show full screen, you will have to exit full screen to access the interface. Now, let's watch this message from our sponsors before we start our show. Hi, everybody. Thanks for joining us again here on Ming Tian Thi. So far in our logistics forum, we have looked at China, we've looked at Japan, we've looked at Korea. Now it's time to have a look at some of the region's faster growing markets. We are going to be discussing India, Indonesia, Vietnam, other Southeast Asian countries today to find out where investors are searching for yield. And we're happy to have a panel of experts joining us that have experience in those areas. So let's take a few minutes to meet each of them, find out a little bit more about who they are, what they've been doing. Harry, let's start with you. Can you tell us a bit about yourself and what you take care of there for CPPIB?
Michael, very pleased to be here, and good morning, everyone. Good afternoon. So my name is Hari Krishna. I have the direct responsibility for real estate for the India business for CPPIB. I'm also a member of the global leadership team of CPP. CPP is a $500 billion Canadian global institutional investor, and we invest principally through joint ventures in our listed real estate programs and work through local presence, which in Asia includes 3 different offices, Mumbai, Sydney, and Hong Kong. And we have 35 people on ground in real estate.
All right, sounds like a lot of work for 35 people. Must be out there visiting a few places now that we're opening up. Let's meet Dennis there in Singapore and find out more about. Dennis is covering a pretty broad remit as well. Dennis, how's it going?
Oh, it's fantastic. It's fantastic. I'm looking after investor services, and my specialty has always been on logistics and industrial. So I also look after for Cushman and Wakefield across Asia Pacific, their logistics and industrial business line.
Okay, so yeah, we have had you on the show before, so it's great to have you back, Dennis. Paul, we're having you on the show the first time from my old hometown in Ho Chi Minh City. Let's find out a little bit what's going on there on the ground in Saigon.
Hey, thanks, Michael. Thanks for having me on this forum. Hello everyone. I've been with BW since August of last year as CFO of BW Industrial. So BW Industrial is the largest real estate platform in Vietnam, and we offer for rent warehouses as well as factories. I take care of the entire spectrum of finance and basically trying to get the team and performance levels up to best practice, and spend quite a bit of time on financing as well to fuel our growth plans. Yep, that's it.
All right, we'll find out more details about what is going on there in Vietnam. But let's take a minute to meet Kieran there. Kieran, you're in Singapore as well, is that right?
That's right, Michael, yes. Thank you very much for having me on this morning. So my role with Logos, having joined the team here in January, is to head up our leasing team for Southeast Asia. We've got presence in Singapore, Indonesia, Malaysia, and Vietnam. So working with the in-country teams there and supporting them on the ground from Singapore with our regional clients who have a presence here in Singapore.
Rapidly growing business, so I'm sure they're keeping you busy. Great to have you on the show. Let's start out. I mean, the interest in emerging markets, I mean, there's a greater interest in logistics around the world. And of course, here in Asia, this is nothing new. And I see a lot of the, in the shows that we've done earlier, one of the recurring themes when we were talking about China, we're talking about Japan, is really this yield compression. So I'm an investor, I'm going into logistics hoping to get yields at a wider yield spread than what I would have gotten in offices, and now it looks about the same as offices. In some markets, it's even tighter. Is this search for yield bringing more investors to look at what's going on in India and Southeast Asia? Harry, what do you see as you're traveling around the subcontinent there?
I think interestingly, what has happened is that it's been a combination of a couple of things. When we sort of contrast it to US and UK, there has been significant amount of compression over the last several years, driven by the way interest rates have headed, also driven by the fact that rent growth has been pretty strong. I think the last month we saw Prologis announcing something like a 22% rent growth in at least some of the markets. Within India, we haven't seen that kind of rent growth. It's been in line with inflation. Many markets, especially light industrial type, has been less than inflation. Some more supply constrained markets has been stronger, and we've seen real rent growth. But I think the global trend of cap rate compression has followed through here as well. I would say on a post-COVID, in the post-COVID environment, I think the cap rates have compressed by another 75 basis odds. Certainly, they are lower than office cap rates, which is always a little bit difficult to believe if you look at things through a 10-year sort of perspective. Uh, and now we are in a rising interest rate environment. So we need to see as to how much steam is further left in the capital return side of the story and how much will have to come from income return, which we are seeing early signs of.
So that really adds a new element to the equation this year. We'd had a long period of time with extremely low interest rates. Do you expect that to have any impact on activity in the India market in terms of general foreign investment and what's driving the economy, or is it too early to tell?
There are two different scenarios. I think everybody across the world needs to think about, every country, every business needs to think about inflation, recession probabilities, and what does that mean for themselves? What does that mean for their portfolios? So that's a constant. And any country that's out of step with the revision in the monetary policy on a global basis will have a major impact to their currencies. So that trade-off needs to be made by policymakers. I think for the industrial businesses, certainly within India, I think we've seen demand coming in from the consumer side, which is reflected in growing e-commerce penetration, which is still at around 5% odd, whereas Singapore is more like 10%, Brazil is 7%, of course China is more like 30% plus. So that continues. The additional driver being the reorganization in the transportation and logistics industry, which is better 3PL networks and more hub and spoke models, distribution centers. So that's creating institutional tenant type demand. And another layer coming in more recently is from the whole manufacturing program. Government has announced a fairly significant production-linked incentives structure for several of the global occupiers to set up their base. And we're already seeing demand coming in from that particular segment as well, which is a Vietnam story as well. But I think a combination of these 3 or 4 different elements is certainly interesting. One of the other elements is that India has gone through a significant period of deregulation over the last 2 years in terms of ease of doing business, GST, insolvency reform, etc. One of the common themes in US that you hear about is this whole debate about red states versus blue states. Think of India as a red state in a sea of blue, where there's a lot of actually regulation increasing. In India, it's going the other way around. So that's one of the tailwinds.
Okay, so you've got some challenges arising at the sort of global macro level, but this at the local there in India, the deregulation may very well counterbalance that. Is that something we should be watching?
I think that is the fine balancing act we have to look out for and see how we can capitalize on it.
All right. Well, thanks very much. I'll be watching that. Let's go and talk to Dennis a bit. Now, Dennis is taking a little wider view there in the region. So in terms of activity in the region, I guess part of it is going to be general interest in emerging markets, but also we're emerging from the pandemic. What have you seen so far in 2022? You're seeing activity on the rise in Southeast Asia and India?
Oh, definitely. I think recently Business Times here actually published a report that for the first time in this year, actually, that the Asian economy GDP will actually outstrip China's GDP, right, for the first time in 40 years, in that sense. So this is a clear indication that the China lockdown may have impacted their economic activities, but at the same time, the rise of the Asian contributed a lot by the India and the Southeast Asia countries are actually doing very well, right? I think Harry earlier spoke about the manufacturing right? So I want to touch a little bit on the China Plus One strategy, where multinational companies are looking to have another production, have another supply chain outside China, so that and this is the driving force for that, not only in supply chain but also in factory space, right? Um, the other thing that we should also understand is that different countries really depends on the maturity of the market will experience a different growth, right? Like in Singapore, we already see a 3% growth quarter on quarter in the first quarter this year, right? So you'll see that in a more mature market like Singapore, um, you will immediately feel the impact of rental growth, right? Because the players are matured, the players are looking for high quality warehouses, the consumers demand for it, but in the case of, say, India, Indonesia, maybe Vietnam to a certain extent, um, the rent increase will come. Okay, it will come sooner than most people expect, right? That's also because we now have international players, that comes into the market, and the international players demand international standards in terms of how they do their business, how they store their goods, how they deliver their products, right? And that is also driven by the demand, the standard set by a more matured um, rise of the middle income group. Okay,
Okay.
so all that put together actually gives you the drivers for the demand of industrial and logistics space.
Okay, so we've got China Plus One. We've got these big multinationals and larger regional players moving into these emerging markets and bringing with them some different expectations. So, sounds like, is this enough to be keeping you busy?
Really so.
All right. Well, let's. I will be eager to see what this brings. But let's. You mentioned Vietnam. Let's go talk to Paul a little bit about what they see there in Vietnam. So Dennis just said that there seems to be a bit more activity in your neighborhood. Are we? It was a tough year last year for Vietnam, wasn't it? It was from pretty tight lockdowns, and you've been emerging from that. Is this? Are you seeing a real rebound in activity there in Vietnam?
Yeah, absolutely. Things are going pretty well for Vietnam, and on the investment front, interesting enough. And I'll just cut it between investment and leasing. But just talking about investment front, even through the last couple of years, COVID impacted years, the investment interest was certainly there. And, we could see it in terms of whenever we entered into competitive bidding situations for land, for example. So investment kind of stayed on track. And then on the leasing side, things was a little bit slow for sure. But what we've seen so far on a year-to-date basis is the sales inquiries and the request for site visits have been trending up pretty significantly. I want to say that it's not quite at pre-COVID levels, but based on the current momentum, probably expect within the next couple of months to attain, if not exceed, COVID levels. Just talking about hunt for yields. Earlier, you mentioned about cap rates being very low and compressed in developed markets. And Vietnam certainly has attracted quite a bit of investment and interest just because about at the beginning of 2021, for example, cap rates were trading at about the 10% levels. So, as you know, that offers a pretty significant yield spread to developed markets. So down here on the ground, investment fundamentals have been strong. Dennis spoke about the China Plus One. So it's a confluence of tailwinds from multiple sources. First of all, supply chain reconfiguration, China Plus One, e-commerce, which Hari spoke about, sectoral as well, tailwinds coming from favorable policies from the government. And then, of course, the macros have been great, whether it's GDP and the PMI and the manufacturing indices. They all have been tracking up, particularly since the beginning of the year.
Okay, sounds like a pretty positive situation. Dennis mentioned that these multinationals, that the regional players, that they are coming into Vietnam, they are expecting some international grade product. They're like, I'm used to operating my factory or my warehouse in China with this type of facility now, and now I come to Vietnam, I do not expect to be something, some shed out in the field someplace. Is this something that works in your favor? Is that a challenge? How are you seeing that same trend there? What do you see?
That's an interesting observation, but one that is very true, right? So it's basically a two-tier market, right? One for the local warehouses, and then the other, which is kind of the grade A modern warehouses and factories. The grade A obviously will cater more for the international players. So pros and cons, right? During COVID, when the borders were locked down, our foreign clients and international clients couldn't come on the ground, and that made it very difficult to commit to leases. Of course, all that has changed in the last couple of months, but certainly true. From international players, there's only one way to go, which is the grade A high-spec warehouses and factories, which BW offers.
Okay, so yeah, sounds like some big changes going on there in Vietnam. Let's check in with Kieran. Kieran, you're there in Singapore, but you're covering very much the region, and I've been covering Logos for a number of years. I'm wondering, so on your name card now, do you have to have room for an ESR, an ARA, and a Logos logo? How does that work?
No, for us, it's Logos at the moment. Yes, we're an ESR group company, but obviously we've got our operations and our various funds that we're looking at across Southeast Asia. And with that, then I suppose just to touch on the points mentioned in relation to where we're seeing pricing, I think with emerging markets, you're always having to justify pricing, just given the level of transparency. I suppose that's where we have the benefit of on-the-ground teams there. But we are seeing that shift towards our movement with core capital looking at the markets where we have a presence for emerging, that are considered emerging rather. So that's definitely beginning to change. And I think that's that journey that we're taking moving forward for emerging markets. And again, it goes back to the point, these groups are now looking for yield that they're not able to get elsewhere. And I suppose if we look at developing markets, those yields have probably remained static over the last 12 to 18 months. There hasn't been that much movement. Whereas in some of these emerging markets, we're seeing that compression, which is obviously attractive.
Okay. Well, last year on this same show, we had some guy named Trent from your company on here, and he was talking about how a lot of what Logos was doing was in some way, it's that need to serve the regional multinational customer, that you had customers that you'd worked with, say in Australia or in China, and those customers were expanding, getting more regional in their business. And it's very difficult if they're going into a new market, if you're one of their primary business partners, to say, sorry, we don't actually cover Vietnam. Is that, are you seeing more of your existing companies, partners there at the Logos saying, gee, what have you got some space for us in Indonesia, in Vietnam? Is that a trend, or are you more serving the local market? What do you see?
It's a bit of both. We're serving all tenants that are looking for space, but absolutely we do have that strategic relationship with certain customers, and I think we're always in that constant communication with them, because we're constantly wanting to understand where their demand drivers. Once we get clarity on their demand drivers, it gives us comfort to push the button and enter different markets, which has always been the case. Understanding that demand, that who will be occupying, why they will be occupying from their business strategy, and what do they see in terms of a certain country, what makes it attractive to them. And we want to be part of that journey with them, because we're most likely going to have existing relationships with them in certain markets. And of course, then it goes back to the point that they know the quality that we're able to deliver for them, given we've delivered it elsewhere, and then how we bring that quality to the market that they're entering. So it's definitely an important consideration, making sure that we're able to deliver that quality, which they expect and which we've delivered for them elsewhere, into any markets that they're entering. And I guess, we're seeing them as well moving forward, wanting that sustainability. And that's something that's very prevalent in our operations, especially because we're wanting to increase the life length of an asset, and make sure that it serves not just now, but it's future-proof.
All right, so sounds like a combination of forces at work there in your business in Southeast Asia, and it is such a diverse market that you're covering. So a lot to take care of there in your role, Kieran. We'll be watching this closely. I wanted to check in with Harry once again and see. So with Harry, I have been, let's see, we got you up on the big screen, it looks like. So looking back through our Mingtianthi archive, and it was 2018 that we were covering CPPIB investing with Indospace in a logistics platform covering the region. It's been a few years now in Vietnam, sorry, not in Vietnam, but in India. And there's been a lot of investment into the logistics sector there. Is India still an emerging market for logistics investments, or is this becoming really very mainstream? Or tell us what you see in terms of what stage are we at in the development of logistics real estate in India? What do you think?
So our original investment dates back to 2017, when we set up a core vehicle alongside Indospace for the existing stock, which was roughly about 12 odd million square feet. We also participated in the new development vehicle and took a minority interest in the platform. And in 2018, GLP followed us into the platform itself with a substantial level of ownership and co-investment. So that's the background. I would say that with that kind of standing stock, which is about 12 or 13 million square feet, we are the largest institutional owners of industrial real estate in India, which, as you can see, is a small number by any standards. So that itself is an indication of India still being an emerging market as far as industrial is concerned. So I would look at three parameters. One, from a scale perspective, the promise is significant, but today's demand levels and absorption levels are not at a stage where you would compare it to China, maybe perhaps a couple of years back. So that's one. Two, also from a liquidity perspective, we haven't seen public vehicles getting established, unlike in office where public vehicles, REITs, have been established. A lot of capital has been rotated. A lot of divestments have taken place. So that's something which is still sort of underway. And also from a returns perspective, there has been a lot of discussion about yields in our previous conversation. But I would think that, especially in any emerging markets such as India or some of the other ones in the region, it's important to sort of take a total return approach, because I think the returns would be a combination of core and development, specifically development, because a lot of the existing stock isn't really meant for the next generation of tenants and or investors, also from a ESG standpoint, not just from a functionality standpoint. And to the land markets, supply, demand, pricing, these kind of variables can be quite volatile. So it's better to take a total return approach rather than a yield approach, so that you're one in the right product and also in the right locations, which is where globally the logistics industry or the warehousing industry is sort of headed to.
Okay, so you see still a lot of room to grow. It's interesting what you said, and India really is a very. I've been tracking CPPIB, what you do there in India. You're involved in a number of different sectors. You've got your retail joint venture with Phoenix Mills. You've got some investments in a couple of different platforms in the office sector, if I'm not mistaken, and of course the logistics area. And it's really been a tremendous amount of foreign institutional capital going into really business park ventures, and you did point to those REITs. Is it simply just a matter of volume is there not enough of a scale to the logistics market yet in terms of getting to the capacity where we would start to see these public vehicles? What's it going to take to get to that level? What do you think?
It's probably a couple of years out. So it isn't something which is uh, it's accelerating all the time, both from a demand perspective, uh, given the trends that we're seeing in e-commerce as well as manufacturing. So I would say that it's just a matter of time before some of the first public vehicles for industrial real estate get set up. So I'm optimistic around that part of capital recycling.
Okay, so that looks like a good opportunity there for. And I am aware that most of the major logistics development platforms have some sort of presence in India. I think that probably a lot of people working towards that same general goal. No doubt that it will happen. When I see those Blackstone guys doing it, I suspect that maybe there's a movement in that direction. They seem to have caught on to a few trends here and there. I wanted to check in with Dennis in terms of what he sees. Okay, we got Dennis. We got you up on the big screen here, Dennis. So, in terms of movement of capital around the region, are you seeing more inquiries come in about India, or is it about static with last year? What's your take on that part of the market?
Definitely, right. Following what Hari have said, you must understand that India is actually in a very early stage of building investable, I call it investable logistics and industrial facilities. They were used to be in sheds, maybe goods are stored on a piece of land covered with waterproof sheets and all that, but that no longer would pass the standard that's required, right? So now we really see a few years of good quality assets, right? That is so-called investable in a sense. So it's before long that you will see a portfolio of assets being set up in REIT. Okay. The other thing to take note of is this thing about ESG. Earlier I mentioned about international companies, corporations, that wants to go to a facilities, it has to meet their ESG goals, right? So this is something where it is very important now for logistics and industrial assets to start to talk about, how they're going to sustain, right? The sustainability part becomes a big part in this. Okay, you may talk about cold store and all that are not energy efficient. With the technology now, there would be a solution for new cold store. So this sort of trend in the market, not so much trend, but so much the goals of corporates, especially uh, international corporates in the market, actually drives a new form of logistics and industrial properties. Okay, and then this new form of logistics and industrial properties then become a good asset, investable asset, that can go on the public market, it can go in a private fund, it can go into various forms of investments, whether it's for the fund or for the mom and pop, right, in the public market.
Well, I mean, I see your point about those more sustainable assets, but ultimately, as we know, in the world of commercial real estate, everything goes back to the occupier. So, if I'm going to make my sustainable asset, it's a more significant investment commitment, right? Now, if I'm the developer, I'm not doing that unless I can get somebody to pay for it. Is this Now, if I'm a major e-commerce player, I've probably got some venture capital. I've got institutional investors myself. So there's that general alignment that I'm Flipkart or I'm Lazada. The money that invests in me wants to see this. So is the rise of e-commerce in the region sort of part of this equation? So I've got these major e-commerce players; they're taking up a bigger slice of the space market. So is e-commerce helping to drive some of this upgrade in facilities, including the sustainability segment of it?
Yeah, definitely is, right? And like you mentioned earlier, the occupiers have to pay for it, right? Or the tenants have to pay for it. But actually, if you really look at it, it's the consumers that are paying for it, right? So along with what we say about inflation and all that is coming, consumers eventually has ended up with a bigger bill, right? They pay more for the products, but you can guarantee that the products are actually better it's stocked better, it's delivered faster, you know, and that is the beauty of so-called e-commerce in this way, right? Because it's the beauty of the market that is growing, you know, especially a big market like India, where there are 1.3 billion, 1.4 billion people, you know, and it's rising middle class, right? People are coming out from their poverty, you know, and going to the middle class, and the middle class are getting richer. You know, in that sense, the consumers are actually paying for it. And that's also because they demand better quality of their product, they demand faster service, and they have to pay for it, right? So the market has a lot of potential in that. The consumers and the market, the rise of the middle class, all come into play, especially in a large population market.
Okay, so it's all starts, yeah. It's that whole sort of chain of value. So the consumers want this. At some point, they're willing to pay for it.
Yep.
That goes on to the e-commerce players. They need to deliver that, and then as the developer, you've got to put that up there. And yeah, that sounds like something to watch at a very regional, if not global, trend. I feel sorry for Paul. We're leaving him out of the conversation. I do have some questions for Paul, so thanks for that, Dennis. Let's get Paul up here on the big screen. So, Paul, you're there in Vietnam, and you just joined there recently. Is that right? You started there in January, I think you said. So, Paul, go ahead.
Yeah, I actually started and I was work from home in Singapore in August, and I arrived in Ho Chi Minh in December. Yeah, so it's been 6 short months.
Okay, so they're getting your feet on the ground there. One of the big words in Vietnam, I think this is, I used to live in Vietnam. I picked up a few things. Lien Duang. Lien is, like Lien Hua in Chinese, or it's a joint. Lien Duang is joint venture. So in joint, I noticed last year that one of the big moves was I think that was last year. Last time we talked with BW, your joint venture with ESR. Is this an opportunity if you're a developer in Vietnam? When we spoke with our Korea panel earlier this week, it's like, really, if you want to get into Korea, you have to be in a joint venture, or it's much easier if you're in a joint venture with a local player. Are we likely to see more international investors doing joint ventures with outfits such as yourselves, more joint ventures with the Vietnamese investors and developers? What do you expect this year?
Yeah, good question. I think it's going to play out like how you mentioned, and a couple of reasons for that, right? First of all, there's a realization amongst land and asset owners that they're sitting on a gold mine, right? Multi-year gold mine, and unless they come across a distressed situation, they're going to be holding on to it. So complete divestment is probably off the cards in most cases. And then the only other way is to come in with capital and big players and basically JV, right? Either with international players like us or the local developers. I think that would be probably the base case point of entry into Vietnam. Everybody knows and realizes, in terms of industrial real estate, this is one of the hottest in Southeast Asia and maybe Asia Pacific at this point in time. So, investment interest is really keen, and I think JV would be the default choice of entry into the market.
Okay, so I think so that'll keep your team busy. I know. Well, you worked previously at GLP before you joined BW. So is this, and you're really coming from a finance background? Is this maybe this is right up your street? Something that you've had some practice working with?
A little bit different, I would say. Yeah, but still familiar. I was familiar with our peer in the local market. They're JV here. I sat on that board, so a little bit familiar with how things work in Vietnam even before I took this job with BW Industrial.
All right. Well, it's going to be an exciting time. I have a lot of eyes watching on Vietnam this year, so it'll be interested to see how that goes. Let's check in with Kieran in terms of getting back to our e-commerce role. And I know that there at Logos, you're really e-commerce, working with the e-commerce occupiers is a big part of what you do. So are you seeing more demand coming in from the e-commerce occupiers there across your portfolio?
Yeah, absolutely. I think when we think of e-commerce, especially in the emerging markets, it's the fact that it's offering that accessibility to a wider audience and that growing middle class that Dennis mentioned earlier. And it's backed by massive smartphone penetration. And because of those fundamentals and looking so attractive in that rising middle class, e-commerce players are just continuing to grow and grow from what we're witnessing. And we've been delighted to support them on their journey across the markets that we're operating. I was in Jakarta last week, actually, and I think it was just noticeable insofar as there has been this almost pent-up demand that we're seeing that's coming through now. Granted, during COVID and the various lockdowns, I suppose groups, occupiers who were able to, or who had to rather, get deals done were predominantly in the e-commerce sector. So I think there was a lot of, I know that plenty of deals were done, but I believe we're still at the cusp of it. There's more to be done. They're looking at automation now to a certain extent as well, and just how to drive more efficiencies across their portfolio. So in the short to medium term, it's business as usual, but in medium term onwards, I think there'll be consolidation as they're looking to that movement and change into automation as well. But we have to see that tipping point come forward.
All right, so it sounds like some mega trends to watch there. We're actually going to be talking a little bit of automation in our next show here on the forum, which will be next Tuesday. Have some people from that ESR place that you guys work with and some other players. So I'm looking at the clock, and we're getting towards the last quarter hour of our program. So we will have time for just one question before we go to the Q&A segment of the program. For those of you out there, I see several questions already coming up on the screen. If you are watching this at your desk, you will have to exit full screen if you're watching full screen to access the Q&A interface. So get your questions up there. We'll try to get those to our audience. And let's get back to them for one final question before we go into our Q&A. So with everything going on in the logistics market this year, we'll start with you, Harry. What is the biggest single shift that you're seeing or that you expect to see this year? Just one change in the market. What is the biggest change that you're watching?
We have to be mindful of the e-commerce industry. It's been a secular trend over the last 8 to 10 years. But with the change in the capital markets, both on the private side as well as the public side, that whole model of negative free cash flow, all of that is sort of coming to a change. And how much does that fundamentally impact the longer term demand is something that we need to be watchful for. And we also need to be watchful about the divergence in the signals from the public markets and the private markets. It's reflected in the stock prices of some of the industrial majors, which are down anywhere between 13% to 27%. And all the regional e-commerce players are down anywhere between 27% to 52%. So that's something that we in the real estate industry need to watch out for.
Okay, so there's a mega trend to watch indeed. If the venture capital market that has been fueling this e-commerce boom starts to pull back a bit, to what extent will we see some of those players consolidating, or we might see a few disappearing if we're not too careful? All right, good trend to watch. Let's go to Dennis. Dennis, your one big change that you're watching in the market this year. What is it?
We will see a two-tier market. So we will see where weaker assets will see yields spending, whereas the core and the higher spec assets will hold on to their pricing, right? Because there's still, especially in the emerging markets, there's still lack of really good quality, high spec assets for logistics and industrial. So where you have the weaker assets, we may see more redevelopment. We know when it comes to the point where it makes sense to redevelop.
Okay, so so essentially you're saying that there is that a product of the amount of capital that's in the market? If it's like, look, I've got a weak asset, it's not quite good at bringing in the return. Is that rather than simply lowering the rent, then I've got to look at deploying some capital to is that a product of that cash being available in say private funds and other places?
You see, the weaker assets will actually have issue getting the tenants, bringing the tenants. As you have better assets being produced, being built, the tenants are actually gravitating towards the better spec assets, right? It will come to a point where the weaker assets then says that, hey, maybe this is the best time for me to get more productivity rather out of the land, right? So you will also see a market where productivity becomes a key. Productivity of the land becomes a key, right? In Singapore, we have seen through that. We've seen multi-tier, multi-story warehouses. In China, you've seen automation. In a big way. But there's a lot of ways to go. There's still a lot of ways to go for the emerging markets, right? They will start to intensify the use of land first, and then they start to go into automation and all that was mentioned earlier by Kieran.
Okay, sounds like some trends that we would see at the regional level. Let's go to Paul there. Paul, you're on the ground in Vietnam. What is the big change that you've got your eye on there in Ho Chi Minh City this year?
Well, not necessarily Vietnam specific. Maybe take a step back, a little bit more global. But that one single factor, I think, might be potential impact of rising interest rates, and remains to be seen how that plays out. But in the worst possible case, if it goes up too fast within a very short period of time, I kind of see it like a double-edged sword. The positive thing is that it may weed out the marginal players and speculators who are, not well funded, not well financed. Not a bad thing for the market, for the markets, as I think, going back to Vietnam, it allows serious long-term players like PW Industrial more room to grow.
All right, so that's if you're well funded, then a downturn can be a good place to be. Interesting to watch. Okay, let's go to Kieran there. Kieran, we haven't forgotten you. Your big change there. Well, your big change is you're in this new role, but what do you expect to see around the market this year?
I feel that probably we're going to see more happening in Singapore in terms of it being its hub increasing in importance for the region. And with that, then I think the benefit Southeast Asia is going to benefit from that as we're moving, and rather groups, manufacturers are moving their reliance away from certain countries and positioning themselves elsewhere, given the various issues surrounding because of COVID and lockdowns that we're seeing elsewhere where they are still progressing. So I think that's going to be one shift, and I think also India will definitely benefit from that also. So it's a great opportunity for Singapore to take advantage of it, and then for the rest of Southeast Asia to continue on that. But I do feel as well sustainability is really going to come to the forefront for multinational occupiers, as we've mentioned already, who will be looking at their portfolio as they continue to expand and looking at their operations over the next 3 to 5 years, where they need to be and how they will have to look at assets that offer the sustainability features and benchmarks that they require.
All right, so some big trends to watch, I think, and big things going on in Singapore, more and more, it seems, these days. I've got a bunch of questions up here on the board. Let's bring up Mr. Francis Lee. I think this is one of Dennis' colleagues there at Cushman Wakefield. And Francis is asking, volatility of foreign exchange and liquidity are always big headaches for international property investors in Southeast Asia. So how do we handle these issues? Dennis, maybe what do you see? You've got some experience there in Southeast Asia. I guess I don't think he's talking about Singapore, but maybe he's talking about some of those other markets.
I think Francis can talk to me on the private. We are colleagues after all.
Well, I mean, this is a big issue.
Well, firstly, I don't think there's really a issue of a shortage of funds. Okay. In terms of that, there are debt advisors, out there that are able to support liquidity, especially into good assets, viable assets. Which is why I mentioned earlier, that there's going to be a two-tier market, right? The weaker assets is going to continue to face issues with liquidity, and the yield will expand for that, right? But for the core assets, because of the demand, and there's really no lack of liquidity for these assets, I don't think is an issue getting that. And if you look at then Singapore, coming back to Singapore, most of the Singapore banks are very willing, are very willing to fund assets, good quality assets, in Southeast Asia as well, right? Of course, it then look into the credential of the borrower, in a sense, and the other portfolio that the borrower have come in to buy, to have come in to own, right? The other issue would be that some of these borrowers have an arrangement, where they work very closely with the developers, right? So when they work very closely with the developers, then you really then have to look at what kind of products they are building, and how the developers, the landowners themselves, are a credit situation is, right? I don't think there's a shortage of money nor shortage of lenders out in the market. Okay, FX is a slightly different issue.
That's a big
there's always
challenge.
hedging. That's a big challenge, and there's always hedging, as always hedging costs every time you deal with FX. Yeah.
I want to check in with Paul on this just briefly. Now, Paul, when I worked in Vietnam, it was actually quite standard practice because of the volatility of the Vietnamese dong to invoice in USD. Now, are people still doing that in Vietnam? Are people still pegging their rental rates to USD, or is it all in local currency now?
No, what we're doing is right now is all local currency. So we've moved away from that, and we do have indexation in terms of our leasing contracts. I just want to say that FX volatility, let's say in the last couple of years, if we look at the charts, has been within a relatively modest band. So with the VND dollar, you don't find that kind of volatility as you find with some other Southeast Asian currencies.
That's good to hear. That helps reassure people a little bit. I see a question coming in targeted at our man, Harry. So Harry, EL wants to know, says, thanks, Harry. What are your thoughts on investing in India's Tier 2 cities? So is that on your radar in terms of, I would say, well, I'm not sure how we define Tier 2 in India, but I know in your retail ventures, you've gone into quite a number of cities. I'm not quite as clear in terms of the logistics, but maybe you can give your thoughts on that.
So we are principally, I would call, a top 6 city investor. Let's call it tier 1.5, which is Delhi, Mumbai, Bangalore, Pune, Chennai, and Hyderabad. In retail, we have made some exceptions. We've gone into Calcutta and Indore as well, which were strong consumer pockets, which could somewhat be sort of extended to industrial as well, because you're looking to benefit of the same consumer story. But historically, what we have seen is that top 6 cities account for bulk of the demand, and bulk of the institutional liquidity as well. So that's where the opportunity set is, and one has to question as to what's the risk premium that one is getting for expanding beyond that. That particular premium isn't entirely clear to me as to is it adequate.
Okay, so that sounds like there's at least a significant element of that equation is there's simply enough opportunity out there in the major cities that maybe there's not adequate reason to go into some of the potentially higher risk markets. Okay, let's see. We have I've got a few people up with the FX questions. We've already more or less addressed that. Let's see. Ian has a question about lockdowns in China. So let's see if we can bring Ian's questions up on the screen. So are the lockdowns in China helping to drive more interest in Southeast Asia and India? Does anyone want to have a go at that? Has that been part of the conversation? I see Kieran nodding his head.
I think Kieran.
Oh, go ahead, Dennis. Go ahead, Dennis.
Yeah, I mean, if you look at the report by BT 2 days ago, I think 3 days ago, you're talking about for the first time in history that this year would be the year that the Southeast Asia as well as the Indian market GDP is going to exceed that of China. Right, so this has something to do with the China lockdown. Of course, they're slowing rapidly because of the lockdown. At the same time, I must also add that this accelerates the China plus one policy that some of the multinational companies that are currently based in China are looking into.
Okay, so we see some of that. What about for Kieran? Are you getting more inquiries from people that are saying, "Gee, we're looking to expand. We've got a nice business in China, but maybe for our next project, we're going to be somewhere else"? What do you see?
Absolutely. I wouldn't say that they're going to be moving out of China. They're just going to be expanding, and their expansion is going to be looking at Southeast Asia and India, and most likely the focus is going to be Vietnam, which, given this geographical location, is going to have a far better advantage compared to other markets in Southeast Asia. But there's definitely that movement, given where it is at the moment, and because of the lockdown that is progressing in China. Groups can no longer take a caught approach of wait and see. They've got businesses to run. There are, as we know, different manufacturers of consumer goods. They always have, towards the third quarter, fourth quarter, launch of various products. So I guess they want to make sure that those launches remain on track. So moving forward, there will be that less of a reliance on contract manufacturers who have a presence in China, solely supplying them. So I think you're going to see those contract manufacturers having to expand into India, Indonesia, and definitely Vietnam.
Okay, so another big trend to be watching. We have time for one last question, it looks like, and this is not a bad one. Let me see, this is again from EL. EL is asking, with interest rates generally increasing, has the panel seen any impact in pricing of assets? So has this started to sink in at the asset price level, or there's a lot of other factors that are going to affect asset prices, aren't there? Dennis looks like he's perked up over this one. What do you see out there, Dennis?
I come back to what I said, as we will see as a trend. You see a two-tier market, right? The top quality core assets, that is actually built for the future, will maintain the price, because the demand for that asset, is not going to go away, right? It is a huge demand. Whereas the poorer assets, will probably have to have their yield expanded. At the same time, it may be positive that asset would then go into a redevelopment to a core asset, over some time.
Okay, so there's no downward, not necessarily downward pressure at this point.
Core assets.
Anyone on the core assets? Okay, anyone else out there seeing any shift in terms of that? Harry, do you expect anything in this area?
I think the public markets are already indicating a 50 bips increase. If your GAV is down by roughly 12%, that sort of works back to 50 or 75 basis points. In the private markets, one isn't seeing that. It may well be a combination of rent growth is strong enough, and there is greater pressure for allocations in any case. I think there are several investors who believe that they're underinvested into industrial, and that allocation is sort of continues to hold up the pricing. And as well, I think the monetary policy shift hasn't been as stark in this part of the world, which also means that the spreads aren't tightening as much.
Okay, well, it sounds like there's these are always very complex equations. None of us have all of the answers. A lot of things to be watching, but I think that it's actually been very helpful to have all of you on the show today. I've learned more about what's going on in the market around the region, and I hope that our viewers out there, that all of you have learned a bit as well. So that is all the time that we have today. Thanks to Harry, to Dennis, to Paul, and to Kieran for joining us today. We will be back on Monday with a look at how e-commerce is driving innovation in the logistics real estate industry. Thanks to all of you out there for watching. Thanks to our panelists for joining us, and we'll see you again soon.